Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Okay, and you're looking at the daily chart of the S&P 500 right now, and I have a feeling that we are going to be heading into a choppy week. I say this because as you can see, we've had some, one directional moves for many days in a row, multiple days in a row. So usually when we have a one directional trendy move like that, it usually leads to choppy or consolidation type moves. Today could be the first day of that choppy consolidation type move that I'm talking about. Okay, so basically what I'm saying is the market does one of two things. It'll either trend and move in a one directional move, either to the upside or to the downside, or it can chop, it can pick a range and just play ping pong between the levels. Okay, so that's why it's very important that we know the levels, know the setups, and just trade it. Okay, a lot of people were bearish. But today bears, didn't get much move to the downside and didn't get much move to the upside because, like I said, we are chopping. So the levels that I'm watching, all right, is this 410 to 410 to 410.5 zone. Okay, if you check intraday, we saw that we had a bunch of bounces around that level. Okay, and this was based on a previous low back on late February earlier this year. Okay, so 410 is a level that I'm watching. Above that, it's 412 and 413.5. We got very close to testing that level today. 10 cents short. Okay, well, 9 cents. It went as high as 413.41. All right, so we need to be watching that level, and of course above that is the 415 level. As you can see, many times it's been tested as a resistance and a support. All right, the big critical level that we need to watch, a couple of big critical levels, is 48.5ish to 49 zone. That's based on the 20-week moving average. If we go to the weekly chart, check the 20-week moving average, you can see that it's around 48.8 right now. That's the yellow line, but you can see the number right here. If I move my mouse, you can see that's around 48.8. So it's around my support level of 48.5. Okay, so we got to watch those two critical support levels, 48.5 and the 407 level, which is based on the 38.2 retracement level. I have my fib levels from January high to June low. Okay, so 48.5 and 407. Keep those numbers in mind, write them down or add them to your charts. If SPY loses those levels, we're most likely going to see more downside. It will put SPY below 407 and below 48.5, would put SPY in a false breakout situation. Okay, because those were the two critical levels that was cleared last week. So if this week we see SPY losing those levels, that's not good for the S&P 500 bulls, the SPY bulls. Okay, guys. So 407, 48.5 must hold. I'm watching the 410. Above that is 412 and 413.5. If that clears, that should put 415 in play, and above that is 418.5ish, around there. Okay, keep in mind I have my fib levels from March 2020 low to the January 2022 high. So that's what my the 418.5ish level is based on. It's based on the 23.6 retracement level. Okay, guys, so all we have to do, we take the guesswork out, is follow the levels Uncle Charles look. My strategy is simple. I look to short failures of support levels, and I look to long breakouts of resistance level. Okay, moving on to Bitcoin. I got this falling wedge pattern, this orange falling wedge pattern. Okay, it's been taking place and building up since last year. All right, and Bitcoin is trying to recapture that level. It actually did recapture that level back on July 28 and is back testing it as a support. So very critical that the 22.9k level holds. Below 22.9k, we will be in false breakout mode of this falling wedge, this multi-year falling wedge pattern, and that would put 21k, 20k, and possibly even lower than that back in play. I'm only bullish if Bitcoin can hold that 22.9k. Above 23k would be great, and that would keep a test of 24.7 and 26.2k back in play. Okay, so above 22.9k, possible is still bearish scenarios intact. Below that is false breakout. And last but not least is Tesla. Tesla's starting to show some selling pressure here. Okay, dark cloud candle starting to develop. It's not a perfect dark cloud candle, but that is a reverse hammer. That's a Thor hammer, red candle, showing us selling pressure. At that, I had a support around a resistance around 922.65. Tesla, it went above it intraday, but failed to hold it intraday. All right, that means next support right now is at 886. That is my 50% retracement level. If that level fails, 865 and 849 is back in play, possibly even lower. All right, so for me to be bullish, I do want to see some consolidation. I want to see Tesla correct through time. It can also give us a clean pullback to one of those support levels, but as long as it's above 886, it's possible Tesla is going to be correcting through time. The RSI is very overbought, so I wouldn't look for longs right now. Very high risk. Okay, guys? So that's what I have for you guys. Just remember the levels and you will be fine. Thank you guys so much for watching. Have a great day. Peace.